Just right off the bat, what is the best way people should prepare to file their taxes amid the pandemic?
There's just, gosh, too numerous. We could be here all day and talk about the things.
But we don't have all day. So we decided to call up some experts and break down the 5 things Arkansans need to know about the 2021 tax season. Number 1, if people lost their jobs in 2020, are those unemployment benefits counted as taxable income? Mary Harris with Jackson Hewitt Tax Service says yes, they absolutely are.
There's a lot of misinformation about that. Some people think it's only the state. Some people think it's only the federal. That is untrue. Both federal and state unemployment that you drew is going to be taxable in your tax return.
Number 2 is all about those stimulus checks. Do they count as taxable income? And what should people do if they haven't received it? Rocky Goodman with Garland and Greenwood CPAs and Advisors says stimulus checks are being treated like a refundable tax credit.
It's not a taxable amount, so those that have received it, there's no need to worry about having to pay tax on that.
And if you still haven't received your check, you can apply for the credit on your tax return. Number 3, it's something that's never been done before. The IRS is allowing taxpayers to look back at their 2019 earned income, the money they got from their W-2 or that they earned self-employed, and compare that to 2020.
They'll allow you to look back to 2019 to see if that would give you a better tax advantage than your 2020 earned income.
Number 4, thanks to the CARES Act, if you're a giver, you'll be rewarded. This year, there's a new above-the-line charitable contribution deduction that helps you write off up to $300 without having to itemize it. And number 5, there's some changes to the retirement plans that could impact your tax bill. If you took money out, for example, of your 401k, and you're under the age of 59 and a half, you usually get hit with a 10% penalty. More exceptions to that rule were added this year to take out that penalty if it was related to COVID-19.
If you did have to take money out of a retirement plan for that, they're allowing you to pay that tax back over the course of the next 3 years.
Every expert adding to expect some delays and to remember the way the IRS works. It is first in, first out. So get it done as soon as possible.
Provide their documentation, tax documents and things of that nature as soon as it becomes available, but to also keep in mind that we're still in the midst of a global pandemic.
In Little Rock, Mercedes McKay, THV 11 News.